For the first time in 3 months, foreign investors have bought Indian stocks for 4 consecutive days. Seeing the current market up move, FPIs are back. But will they stay? Let's discuss it further with Sudip Bandyopadhyay, Group Chairman, Inditrade Capital. Sudip, it looks like FIs are back and in full force. What's driving that trend? What's bringing them back to Indian equities?
Well, a couple of things. I think one is the US markets have recovered, and that when the mother market recovers, it's got a positive impact on pretty much all the markets, including India. Also, the FIIs have realized that Indian markets have become relatively cheaper after the massive correction we have seen. Currency depreciation also makes Indian market a little more attractive, vis-a-vis what it was 1 month back. The same amount of dollar, they can buy more shares in India. So all this is making Indian markets attractive, and FIIs are coming back.
Sudeep, given that we've seen the rupee depreciating, but still not as badly as some other currencies, equally Indian equities have been somewhat cushioned by the retail investor. Do you feel overall India is still an attractive destination for FIs to pump in money, versus some of the other emerging markets at the moment?
Absolutely. I think the moment we see risk-on mood back for the FIIs globally, India will attract a lot of FII money, which is sitting in the wings. The other important thing is, if you look at Indian markets, what has been witnessed in the recent past is that though the many emerging global markets corrected by 25 to 30%, Indian markets only corrected at its worst about 15%. Now, that does show the resilience of Indian investors and Indian capital market, and it augurs well for the future. FIIs will be emboldened by this fact that the flows of FIIs only doesn't determine the fate of Indian markets. Also, as you rightly said, the currency depreciation has made, to an extent, Indian market a little more attractive vis-a-vis 1.5 months back, when the rupee was much stronger, because the same amount of dollar, they get to buy more shares in India.
Okay. And what would you be looking to buy in a market like this? As you said, with the various current factors at play, primarily the currency, of course, along with inflation. And given that we're now in the throes of earnings season, what clues is it throwing up for you? Where do you feel, money is headed at this point of time?
Well, I think few sectors have been clear winners in this phase. I would say one is definitely the FMCG pack. Yeah. I think the reading is very clear that consumption is coming back. Yeah, there were some cost pressures in between, and there was little uncertainty over rural consumption. But the way the monsoon has been progressing, the expectation is that rural demand will bounce back. And with that, consumption-focused stocks in India, FMCG companies in particular, should do well. And I think that is leading to a run in the FMCG stocks. The other sector which we like and we've been seeing traction is BFSI, with credit demand growing on the back of consumption growth and also probably a revival in capex. I think the lenders are in a good spot. Also, the asset quality is improving remarkably and sharply. That is reassuring investors. So BFSI is another pocket, particularly large banks, both in the PSU as well as the private sector space, which is attracting a lot of investments.
Okay. And would you stay away from IT then? Or what are you making of the recent spate of earnings?
Well, I think IT is a bit of a clouded feedback or clouded at least view at this point of time. There are a couple of things happening. One is there is a significant tailwind which is being added by the currency depreciation. All Indian leading IT companies derive a significant part of their income in dollars, and that is going to help them with a depreciating currency environment. On the other hand, the demand scenario, which there are a lot of commentary that there may be a problem as far as demand for their services are concerned going forward, considering that Europe probably will head towards a recession, US is slowing down, and there are growth slowdown in multiple other markets. The question is whether this growth slowdown will really impact Indian IT companies. At least the commentary of the management of these top IT companies doesn't seem so. because they are pretty confident of the demand, they're pretty confident of the future order flows, and they're pretty confident about margin improving in the coming quarters. So it's a trade-off, the way we read it, between demand destruction, which may happen in future, and currency depreciation, which is happening currently. As far as Indian IT is concerned, we are advising caution on the mid-cap IT, whereas the large cap IT, if you have a mid to long-term view, I think it's good to go and buy.
All right. And one final question, Sudip, I want to just squeeze in on Reliance Industries. Where do you see the big boy poised at these levels, and what would be your advice?
Well, I think Reliance has been our favorite stock for some time, and I think there is a compelling reason to buy Reliance. The GRM, which the refining margin is determined, is at all-time high, Singapore GRM, and Reliance's refining margin also probably will hit all-time high levels in the quarter gone by. The petchem business, which was a little down earlier, also is expected to do well and is doing well at this stage. So the traditional business, the old business of Reliance, is on a very, very strong wicket, unlike other quarters. That is a very good news for Reliance. The second segment of the business, which is the new and emerging businesses, Jio is expected to also post good results in the quarter gone by. The ARPUs, which was kind of stagnant and not increasing for some time, has finally started going up, and I believe the trend will continue. The retail business is also seeing a lot of traction after the COVID-related lockdowns and other logistical challenges. So overall, all the business segments are expected to perform well, and we will see probably a significant bump up in their quarterly profit when they announce the same this week, later this week. So yes, at current valuation, Reliance can be acquired for short to medium term.
All right, Sudip, thanks so much for joining us on the show today, and great to hear a positive outlook on the markets and the way ahead from here.
If you like the video, do like, comment, share and subscribe.